Just so you know, to give everybody an idea of what we're going to do today, Trevor Thompson is going to talk about his journey from an active to passive to active investor. And then, first of all, the way this normally goes for you who haven't been here for a while is Trevor will talk for me for 20 to 30 minutes total, or maybe he goes over, that's fine, as long as it's not over 45 minutes. We get time for the breakout. But what he's going to do is talk about going for, as I said before, going from passive to active. And the way it works is that we'll do that, then we'll do a breakout session at the end of that where people get to know Trevor and also get to know each other and meet people in the meetup. And then after that'll happen in probably about the 40 to 45 minutes at the end of the session that we have here today. First thing I do is to start off by reading off K. Trevor's bio, and that is K. Trevor Thompson is based in Towson, Texas. He has invested in 31 syndications, 20, eight full cycles limited partner, and 11 as a general partner sponsor. Over the past few years, he has become passionate about learning about real estate investing. His goal is to help 1,000 people to reach financial independence through real estate investing. He is an avid learner, continually connecting with like-minded people. He is now an active sponsor and is very excited to be partnering with Massive Capital as VP of Investor Engagement. In this position, he is creating a community for our investors where we educate, inspire, and create a place for investors to feel part of an investor-friendly network. And with that, I'll turn it over to Trevor.
Awesome. Thank you so much for having me, Charles. It's been an honor. It's been a while since I've been back. I'm going to share a screen, do a quick talk. I talk fast. I like to keep going. Plenty of time at the end for question and answers. Tonight, we're talking about my favorite subject, me. No, I'm only kidding. We're going to be talking about switching from a passive investor to an active investor and the challenges that you can have when that happens. So I'm going to start sharing my screen, and hopefully everybody doesn't get tired of seeing my funny face. You see it good, Charles?
Yeah, I can see it.
Awesome, perfect, thank you. So tonight we want to talk a little bit about being from a passive investor to an active investor. For those of you that don't understand and are fairly new, a passive investor is someone who gives their money to a syndication or to some sort of group, and you're passive. You're not involved in any of the day-to-day. The team manages everything. On the active side, you're part of the team that finds the deals, underwrites the deals, puts it under contract, and then manages the deal and returns a portion of the profits over to your passive investments. So a little bit about me. I'm a passive investor turned into active. I was a successful business entrepreneur, 47 years in the attractions and entertainment business. My last one was 20 years with iFly Indoor Skydiving. I actually opened 46 of 80 locations all over the world, and I'm deeply passionate now about real estate investing. So my goal is to have 1,000 people reach financial independence through real estate investing. Want to be sure I'm clear. Financial independence means something to everybody is different. So yours might be to put your kids in college, to retire your job, to have enough passive income coming in so you don't have to work. I'm not here to determine what your financial freedom is. I'm just trying to introduce you to real estate investing versus putting your money in the stock market or some other way. I hope that you'll join me on my journey. So this is a list of my passive investments that I've been in. So I've invested 20. I've been doing this for 5.5 years now. 8 of these have gone full cycle, and I've had all spectrums of success. So my best one, they tripled my money in 20 months. My worst one, they lost my money. So that happened last year. There's a lot going on. We can talk a little bit about that, but they didn't raise enough money. They ended up not implementing their plan quick enough, and then their cap rate expired. They didn't have enough money, and they were repossessed by the lender. So not what you want to have happen. But again, on 31 investments, I've only had one that have struggled, and I've been doing well. So I want to talk a little bit about taking massive action. So if anybody who follows me, and I'll put a link with all my contacts, I do a lot. I'm super, super busy. So last year I co-hosted 48 educational webinars with Massive Capital. We do a webinar every Wednesday night at 6 o'clock. It's 6 o'clock Central. It's free education. We talk about different topics, And sometimes we have guest speakers, sometimes we don't. So these are hosted every Wednesday night. I'm also super active across social media. I kind of tried to add it up, and I've done 700 posts, and this is based on last year. And I'm pretty active, mostly on Facebook, pretty active on LinkedIn, and an old man trying to figure out Instagram. Haven't got to TikTok or X yet. I created 54 YouTube videos on tips of how to do things. So, for example, I learn a little bit differently, so I assume other folks did. I got sent a PDF once, was all about real estate terms, but it was all mixed up. Nothing was put together. So I decided to create a little video and put all of them together based on topics and a little bit more digestible. So my goal again in providing education to help people to be able to do it. I do have a Facebook group. I have about 800 members, and I call it Earn and Learn with Real Estate Investing. I think it's really important, even if you're a passive investor, that you take the time to learn while you earn. All right, you want to make sure that you're being prepared. I've been part of 25 different deal webinars as a sponsor of 11 deals. I've been the host on a lot of webinars offering different opportunities. Last year, I was a guest on 35 podcasts, an additional 25 webinars. So that just like what I'm doing here, where I present some information. And I've engaged on 1,000 one-on-one phone calls. Actually, I should change that to Zoom calls. Most of them are Zoom. And as you can see, I love making funny graphics. So there I am saying that financial freedom is calling you. You need to answer the telephone. I really try to have a lot of fun and make it to where I'm approachable and it's not as intimidating. So I want to talk about passive to active is not so easy. So I had a job and I loved my job and I had no intention of leaving my job, but I knew that I needed to do real estate investing. I was always terrified of single family. I didn't want to do tenants, toilets, and trash. So what did I do? Nothing. Big mistake. Even like 25 years ago, I got a copy of Rich Dad, Poor Dad and went, wow, that's what I need to be doing. I did nothing. I kept going around the Monopoly board, collecting my pay as I passed go all the time. And so I'm here to tell you that, first of all, you want to start at least passively and you want to start actively, but I want to talk a little bit about some pitfalls. So I didn't put it in the slide here, but I spent about 18 months trying to get a deal to happen in the state of Texas where I am. And I finally got on somebody else's deal here. It was 240 doors in San Antonio. We spent 6 months and we could not close. So frustrating. I actually lost $75,000 hard. If you don't know what that means, is so we put some money hard. We needed another extension. The other partners had put all their money in, so I agreed to put 75,000 hard, thinking that I was going to be able to get the deal done. I only raised 375,000, which was pretty challenging. It was my first raise. And after holding most of these people's money for 4 months, I had to give it back. Then I got on my second deal, 167 doors in Corpus Christi. And right around that time is when the lending environment went kind of wacky. And I'm super glad that they did. The team decided to back out of the deal because I think we would have been one of those folks on the news. And I had 65% of my investors follow me. So I had to give back 250,000. So here I am, 9 months after 18 months of trying to get on deals, and my first 2 deals didn't happen. And I had really lost a lot of confidence with my investors because I took their money and then we couldn't close the deal. It was super frustrating. So if you want to be an active deal sponsor, there's a lot of things to consider. So you've got all of these hats to wear. We're going to talk a little bit about the hats. And I was wearing a lot of these hats trying to get my own deals done. And again, I might have been able to start with some smaller deals and move to bigger, but I wanted to go big. Then I did 3 deals outside of massive capital. So this one here, Wesley Place, 66 condos in Columbia and South Carolina. I was actually doing broker tours for this group in the state of Texas. And again, we kept making offers and not even getting in the top 3, not getting the best and final. And they called me, and they also have a mentoring program, and they had a student who basically dropped the ball. It was a really, really good deal. and they said, hey, Trevor, we have 3 days, we need $3 million. Can you help us? And so out of the 250 I just gave back, 180 followed me. So I got a small position on that particular deal. Then finally in November of 2022, I was a general partner, one of the lead of 3 partners on 75 doors in San Antonio. And this was my very first time that I've been able to get a deal done. And we're talking almost 3 years into my journey. And then I did close one other deal just outside of Austin, Texas in Round Rock, 52 doors. And then I joined Massive Capital the beginning of last year. And I did 8 deals with Massive Capital. So part of it is being part of a team that has deal flow. So we did a 10-acre land development, 62 doors in Fort Worth, a 2 portfolio package of 196 doors in Warner Robins, Georgia, which is just south of Macon. We raised money for an X-Base industrial condos. We did Cottonwood, which was 18 doors in Denver, Colorado. We raised money for a new build retail here, still being built in Austin, Texas. We got on 42 doors in Chatham, North Carolina. And Horizon was what deal that just closed. Actually, we didn't make it till the beginning of this year. We're just finishing our raise on this particular door, on this deal. This is 204 doors in San Antonio. So I want to talk a little bit about it. Acquisitions, how do I find deals? So many people join up on a mastermind. They go to a program and they tell you, oh, just contact brokers, offer to buy them a coffee, do this, do that. I'm here to tell you that if you're new, they are not sending you the prime deals. They are sending you the deals that everybody else has passed on. Broker's job is to close a deal and sell a deal. So they're sending deals to people that are closing deals. So it's super important to be part of a team that's closing deals so that you can be taken seriously. Underwriting. I am not an underwriting expert, but I know how hard underwriting is. And so again, in our mastermind, we underwrite deals together in a group environment. And you really need to understand all of the nuances, because if you make a mistake in your underwriting, you could be paying too much for a property and then not able to deliver the terms to your investors. Then you got a deal. Somebody actually accepted your LOI. I don't know how many people, I can't see because when I'm presenting, I don't see you all, but man, that first deal I closed in San Antonio, it felt like a full-time job. I had the lenders, the insurance companies, the bankers, the title company, the things that needed to be done. It was a nightmare. And again, it was so important on the future deals where you had a team. So there were lots of people that are helping you get through your journey, get that deal closed, because it's super important to be able to close it. So then you've got to do due diligence. Okay, so you got it underdone. And again, I don't know how many people have been involved in due diligence, but it's a lot of work. You've got so many things to inspect. It's not just show up for a day, walk a few units, make a few notes, and give it a thumbs up, right? You need to get on every roof. You need to scope every plumbing line. You need to test every electrical plug. You need to decide, do I need to change out appliances, flooring, this and that? You need to go through everything, because again, if you make a mistake on your assumptions, you will not be able to hit your business plan. So having a good property management company that has access to vendors, or having a team that has access to vendors. Just to give you an idea, that last deal with Horizon, we actually brought 21 people to due diligence day. There were 7 leaders. I was one of the leaders of the group, and we actually split up all of the duties. And so each person had 2 people with them. So there was 3 of us. We would go into an apartment. Somebody would be taking the notes. Somebody would be taking the pictures. And then we would upload all of this into the main thing. We also made sure that everybody that was learning got at least an hour with the property management company on the lease audit, so you can really understand. So it's super important. Again, unless you hire a professional team, to be able to walk 204 doors, we managed to do 90% of it in a day, and the second day, and it was mostly because people weren't home and they didn't have access to the apartments. Capital raising. If you remember before, I mentioned to you on my very first deal that I raised $380,000. I did not have a CRM. I didn't have anything. I am not a techie guy, so I literally cut and pasted emails. So an Excel spreadsheet, I would cut your email address, a Word document, I would copy my thing, and I would send it to you. It was super, super, super frustrating that I wasn't that technologically advanced. Now, of course, I am, but it was super hard to be able to track people, do different people. So it's super important that you have a capital raising system. So how many people have been here, right? So everybody tells you, you start talking to potential investors, you get your soft commits, okay? So if I had a deal that would double your money in 5 years and give you a 17% IRR, was located in this market with this plan, would you invest with me? And a lot of people go, yeah, I'd invest with you. All right, I'm sure a lot of you have had this happen to you. But what happens when you actually send them the email? Do people just say, oh, this is what I've been waiting for, Trevor. Thanks for sending it to me. Let me fill it out right away. I'll wire the money tomorrow. It doesn't happen. Unfortunately, what happens is crickets. Okay, they all of a sudden disappear. They feel like, well, I didn't really think you were going to ask me to put money into a deal or do different things. So it's super important. And one of the things we found at Massive Capital is we have a team of people. So I may be calling Charles, and Charles is like, he's my friend, so he really doesn't want to say no to me. So I'll have Jasmine call him, and he'll wonder, who's this Jasmine person calling him? And she'll say, hey, Charles, Trevor's been trying to reach you. Let me talk to you. Because again, you don't want to get ghosted. I don't want to keep calling Charles 6 times, sending him all these things. If he really decided that this isn't the time, this isn't the deal, I'm not ready, whatever it is. So having a team that can help you be able to do this is super powerful. And I don't know how many of you are raising capital right now, but it is hard work. I never got to raise it when it was too easy, but it's gotten super hard. The world is, from all of the news and all things happening, is definitely in panic mode. All right, so then you're going to close. And we mentioned this a bit earlier. I got out of sequence a little bit. You need a team. You need people that are going to take care of the bank. Somebody's going to take care of this, make sure everything is happening. All the things are happening. And again, having an experienced team that's closed deals is super valuable. All right, you got the property done. How many people know that actually after you close, that's when the real work starts? Okay, everybody thinks the real work is finding a deal, getting it under contract, raising money, and getting closed. And a lot of those mentorship programs teach you that you do that. You hire a property management company, you have a phone call for 1 hour a week, and they do all of the work. And you sit on the beach in Puerto Rico drinking Mai Tais going, man, I really like commercial real estate, multifamily investing. I'm here to tell you it's not true. You really need an asset management team that can help drive the property management team. So again, I'm super glad to be part of Massive Capital's mastermind. I've closed all of these deals. And actually, I should have updated this slide. I'm just past $6 million on my total raises. So I'm super excited about that. And again, even though that sounds a lot compared to other friends of mine or other people, it is definitely super challenging. And again, if you're interested in learning more about a mastermind, tonight's not the night, it's just part of my presentation, but we do have one. I'd be happy to talk to anybody about it. If you have your cameras on, you can scan this. I'm also going to put a link in the chat to where you could book a call with me. Again, I'd love to be able to talk to all of you. Hopefully you found that some value. I told Charles I thought it'd be about 20 minutes because me talking is not near as exciting as you guys asking me. Stop sharing and see if anybody has any good questions. I didn't look at the chat yet. I've got a lot of AI assistants. Hey, Christopher, good to see you, sir. See a friendly face there.
Hello. How are you, Trevor?
I'm awesome. Oh, there's another friendly face,
Good
Vera,
job.
man. Oh, and Matt, man. Look at all these people coming out to support me. Thank you so much.
Any questions?
Any questions? Sure. Any
Sure.
question? Yep.
Sure. Hey, Trevor. How's things?
Good, good.
Good. Good. So it sounds like capital raising is your bread and butter wheelhouse kind of superpower right now.
Yes, that's the main thing I do. So my title is investor engagement because we want to create an investor community. But at the end of the day, my role is really trying to raise capital for our deals or to work with folks that have joined our mentorship program to help them raise capital. So that's my current role, yes. And maybe if we get a good property manager, we can all go to your place in Indonesia behind your head there. And,
Yes.
And we can sit there and drink Mai Tais and hopefully somebody else will be doing all the work because it's hard work once you get done.
Yes. We have we'll have top-notch services for sure. Yeah,
That's
this
awesome.
is a sample deluxe lodge that we're going to put together.
So
Yep.
she was asking about booking a call. You can find me pretty easy on LinkedIn. You just got to remember the K on my initials. Keith is my legal name. I don't go by it. Trevor Thompson. And there's a link there to book a call. Be happy to. I love talking to people for those of you that don't know me.
So I'm just wondering, with the massive capital deals that you did recently, are they all with the same operators or are they?
So Massive Capital is an operator. Yes, sir.
Oh, wow. Okay.
Yeah, so we're a group. We have 200 million now of assets. They've been in existence as a group for 2 years. They all did things before Massive Capital, but they joined up together and formed Massive Capital. It has 3 partners. Then it has 7 what they call equity partners, which is where I am, where we're a part of the whole package of Massive Capital. So that's why we do the Wednesday webinars. I do a lot of the deals. So we do more than just raise capital. But at the end of the day, once you provide a lot of education, you provide a lot of value, the next step is to say, how can I help you create your financial independence, which of course makes capital raising. Without capital raising, none of this happens. Yeah, and it's just put me through. I mean, I know I was on a lot of Zoom calls with you guys before, struggling to, and it was tough. Hey, Vera.
Hey, Trevor, that was amazing information. Thank you so much. I didn't know the first 2 fails. That was amazing that you're sharing and being vulnerable.
Yeah, it was super frustrating, right? And before that, I only talked about those because those were what I call real failures, because we actually had a deal and couldn't get it closed. The number of properties that I walked, more than 100 properties, made 60 offers and won 0. And even when, and again, I was buying in the heyday, and maybe I'm lucky I didn't buy because maybe some of those are in trouble right now. But it was super challenging. And again, you know, and it wasn't like I hadn't done anything, right? I mean, at the time I was doing it, I was still a passive investor. At the time I started looking to be active in 12 syndications. I had some experience. I actually volunteered on one as an asset manager with one of the ones I was a passive investor that they had some struggles and I lived closer to the asset to help them. But it was super challenging because brokers give deals to people who can close deals at the end of the day. And if deals are coming down to, and you know, even I got to be honest, Massive Capital, I'm talking big, like we're, 200 million is nothing, right? When you look at the Rise 48s and the Joe Fairless with the billions, those guys are the ones who are getting the deals even before they get right. It's super challenging. And again, what I want to make sure you understand is that it's super hard, right? A lot of folks join some of these masterminds or programs, and it's all, here's a little bit of information, go find a partner and good luck. And I'm here to tell you there's not much good luck out there. It's hard work.
Yep. I'm with you. It's a lot of work.
Yeah.
So, and we're still in that environment. You know, we're experiencing it. We are in the center of the storm. You know, we sent in so many LOIs in so many, you know, best and best finals. It just it's challenging. It's not
Yeah,
easy. It is a lot of work. Yeah. So I do have a question on
Yeah.
raising capital. So let's just say you have a 506. I wonder, do you use 506B more or 506C more?
Yes, so that's an interesting question. So we've actually, and we adapted it the first time in panic mode. We had a 506B, we weren't getting our money raised, and we decided to research how to switch it to a C. And
Mhm.
so we were able to switch it to a C, and we had to do it. So now our current average practice, except for a couple of deals, we start all of the deals out as a 506B. We
Mhm.
disclose that. We
Mhm.
set a date for 506B to be done. And then we close the portal, upload the same portal, but under a 506C reg with a whole new PPM uploaded. And when
Love
you're 506B, obviously you can't invest after the deal is closed. So we get
Okay.
to talk to our friends and family. And this works
Yeah.
really well for the folks in our mastermind because they just don't have the database of accredited investors. And it
Mhm.
also works because it creates, you know, you want to create a sense of urgency. Well, it's
Mhm.
hard to create a sense of urgency when we're all struggling just to get our raise done. So the
Mhm.
sense of urgency is, hey, on May 15th, we're switching to a B. And if you haven't
Mhm.
done your paperwork and taken care of everything, you are going to miss out and have to wait for our next one. And then when it switches over to a C, there's a little period in there where we shut it down, we make sure all the I's are dotted and the T's are crossed. And then we redo the portal as a 506C. We upload the new PPM. You also have to upload a whole new deck, okay, because your deck is different, right? Your presentation deck's not a lot different because
Mhm.
in the investment parameters don't change. It's just who can invest. And then, of course, we can start the marketing. And then, of course, you can always do the marketing after you've closed. And you know, because that's super important on the marketing. I can
Love,
see
love
my
it.
good friend Ethan's here. He's helped us get a couple of deals closed.
Oh yeah, yeah. Ethan, hey, good to see you. Yeah, that's amazing.
Yeah, yeah,
So
we had a couple of times where Ethan gave us some short-term funding to be able to get closed. So
yeah, love it. Yeah, they have a yeah. Ethan has a very strong team, and yeah, so that's massive. I'm so impressed with the massive team, and you, Trevor. So on the 506C raise, do you feel like you got people? You still those people who invested through 506C, they still have good relationships with you, or you feel like there might be some investors who just invested because of the project and the company?
So I think what happens is with a 506B, your exposure to the public is a lot less because you're only sending the deal to people that you can really verify that you have a real deal. So it's happened to me, right? I had a relationship with people, but somehow I didn't document it correctly and I didn't get them sent the deal. And then next thing you know, we published it as a 506C and they're, you know, because they saw it on my Facebook or on my LinkedIn. And then, for example, so Massive Capital, we have 10,000 people in our database. About 50% of them we register as having an established relationship with, and we're constantly updating it for the relationship. So it's not only, you could still be unaccredited and you're marked as 506C in our database just because we have that relationship, right? So we send
Got
it. So
it.
super important, but it's super important to make sure that you track it correctly, that you follow and you're compliant with all of the rules.
Thank you, Trevor.
Thank you. Thanks for coming out.
Mhm.
Any other questions? Hopefully that was helpful. I try to do what I'm going to refer to as an honest message that still leaves hope. You know, because my goal is right that to tell you the truth, but also, you know, and you can get there, right? You can definitely get there. And a lot of people ask, well, why did I switch to active? from passive, and there was a couple of reasons. The most important reason was this thing that happened called COVID. So I was thinking about leaving my job, and I call it, I was looking over the cliff, and my employer said, we're no longer doing development, we're downsizing on survival mode, and pushed me off the cliff. So they made the decision for me. I might not have been as ready as I thought I would be. And I decided, okay, I'm a 58-year-old man. Do I really want to go work for some 22-year-old kid with an MBA that's telling me what to do? I don't think so. And so I decided to do it full time. And I was already much more active. I'd become less and less, because again, I loved my job, but then the company changed a little bit. And then of course, COVID changed so much. But it also provided this huge opportunity. I never would have been able to do 100 broker tours because I would go on all of meetups like this and say, I'm in Texas. If you need boots on the ground to go do a broker tour, I promise I won't steal the deal from you. Let me go look at it. So I learned a ton and I made a ton of connections, and all those connections now are starting to pay off more and more.
So when you're capital raising, do you have like any investors with like that write really big checks?
So to date, we have not been able to get big checks. The biggest one I've gotten is 300,000. And you know what I hear the funniest thing about the 300,000? So I literally did a presentation. I knew these people, they knew me, we'd never met. They sent me 2 questions on email. I answered the 2 questions, said, here's a link to book a Zoom call. They emailed back with 2 more questions. I answered those 2 questions, said, here's a link, let's book a personal Zoom call. I know you, you know me, but let's talk some more. The next question was, where do we sign and send the money? And they put $300,000 in it. And then I had one person, man, I spent 12 hours and I got $25,000. Right. So there's no rhyme, no reason, right? I mean, I spent so much, and I understand it was their first investment. They'd had a deal and they didn't even want to do the minimum, and it was so much work. Now, but at the end of the day, that they've invested a second time again. So you just kind of never know where they're going to come from, right? I run an in-person meetup here in Austin, and a lady showed up at the meetup and said, I want to learn about real estate investing. And she had a good job. She had some retirement funds that she'd moved into self-directed. So she was aware enough to know that she needed to do that. She has no interest in being active. She stopped coming to all my meetups, but she's invested in 4 of my deals. You know, and we're friends, right? She was actually buying a house and selling her house, and I referred a friend of mine. So yeah. Joanne, go ahead. You should be able to mute yourself. Joanna,
Hi,
sorry, I said your name wrong.
it's okay. It's Juna.
Juna, I said it wrong twice.
It happens. It's all good. So I have a question. So in the climate that we're in right now, right, are you finding capital raising to be a little bit more difficult, or like, obviously I'm sure you've had to pivot how you like go about capital raising. Are you what are some of the challenges that you come up with? Because I'm finding like as I go and I speak to people, like they're obviously not accredited, right? And some of them are, I guess, what you could call a sophisticated investor, and some aren't. And so the biggest challenge for me is like kind of overcoming where we come from, a climate where everybody was kind of a little bit easy. It was a little bit easier when things were hot to get people to comfortably invest. I'm struggling with just speaking to what things look like in a market that's a little bit unpredictable.
Yeah.
And so I get stuck there.
Yeah, so it's definitely, so I don't think I've ever had the good fortune of raising capital when it's easy. So I'm waiting for that beautiful moment to happen, but it definitely was easier at the beginning. And so what I talk to people a lot about is, listen, if you're standing still, the world is passing you by. You are never going to get caught up if you sit there and wait, if you're so just frozen in it. And I also talk to a lot of people about starting early. And I go through and I try to talk to them about how that this can change and, you know, create financial independence. So I always give them this example. I'll say, and again, it's a big example because not a lot of people have $100,000. But I always tell people, you know, I didn't start till I was older. So I wish I'd have started earlier. And I say, imagine if you invested $100,000 and it doubled in 5 years. You reinvested 2, it became 4. You reinvested 4, it became 8. You reinvested 8 and it became 1.6 million. You reinvested that and it became 3.2 million. And I'll say to them, would you give me $100,000 if you really believed I can double your money? There are no tax consequences, and that single investment could be worth as much as $3.2 million. Would that change your family's life? And nobody can say no, right? Nobody can say, they can say, I don't believe you, or they can say different things. So I try to talk about how that this is, they can't be afraid to today, they have to plan for tomorrow. And I've been somewhat successful, but it's a lot of work, and you got to build a lot of confidence. And like I said, you know, I spent 12 hours with this one lady and got finally just said, how about if you do half just so you can get comfortable? And that's where I got there. I hope
Okay.
that answered your question.
Okay, Kay, I have a question for you. I have 3 questions. Okay, first of all, how you beginning start this type of investor? You find an investor, and the second question is, usually you find a project first, or you find the money first. Third is, how long you work with the investor, okay? For example, like a syndicator. So how many years returns? How many percentage returns do they get? Thanks.
Okay, that's a lot of questions. Hopefully I got them all. So I remember the last one because I've got ADD, so I forget the first 2. But so normally our goal is to double investors' money every 5 years. That's a simplistic goal. Some deals aren't 5 years, but that's kind of a simplistic goal of what we talk about, that you're going to double your money in 5 years. And again, I start out reaching and connecting with people by posting a lot about financial independence, posting that if you have a retirement account from an old job, you can move it to self-directed and use that to invest. A lot of folks, of course, talk about the difference between the stock market and real estate investing. A lot of people talk about the difference from single family to multifamily. So depending who I'm talking to, like if I'm talking to somebody and they're interested in single family, I always just talk to them about the economies of scale, right? If you have 10 houses and 3 are empty, you're in big trouble because you're paying the mortgage on those other 3. But if you have 100 apartments and 10 are empty, you're still collecting 90 rent. So I try to go through all of those analogies to get them comfortable. But at the end of the day, you have to talk about that you're providing an opportunity for them. You are not selling them to join your deal. You are not trying to sell them anything. You're trying to give them an opportunity to change their life. And if you can get through to that, it helps a lot with the fear. Hopefully, did I get your 3 questions?
Yeah, and also I have one question is, how many percentage? Oh, you say you double for 5 years, so not
That's the
bi-yearly.
goal. That's the goal, correct.
And how you find the project first, or you find the money first?
You're always raising money, so you're always looking for money. You never stop looking for money. Even if you don't have a deal, you stop talking about money. You keep talking, trying to find investors. You never stop looking for investors, so that when you have a deal, you have a database of deals that can help you be able to raise the money, because no deals get done without the people putting money in.
For example, you don't have project yet, how you raise money? Okay, the people ask you, what's your business plan, or, you know, what you can show?
So you talk about past deals, perhaps you can talk about if this is what we normally like to do. So we buy an apartment complex. You talk about that we're buying a business. We're going to improve the operations. We're going to be able to improve the rents, increase the net operating income, and then sell it for a multiple. So you have to tell them about the business plan. You're not telling them about a specific property, but you're telling them about what you're planning to do when you get a specific property. Does that help?
Yeah, thanks.
Perfect. Thank you for questions. I love questions.
Thank you. I just added your link in too. I'm Helen
Awesome.
too.
I'm
Thanks.
good. I'm so excited. Thank you.
Yeah, thanks.
Any other questions? By the way, I see you're into real estate. There's a great book put out by a guy named Bob Burke or Robert Burke. I can't remember if he's Bob or Robert, called The Top 1%. It's a great book to read for real estate investor, for real estate folks. It talks about getting investors to buy real estate versus single family homes and how you can grow your business quickly that way. And then you can start to leverage and be able to get involved in real estate deals. It's a great book. He's called the Godfather of Real Estate. And he actually, for those of you that know the Robert Helms from the Real Estate Guys, that's his dad.
If possible, can you type in the chat box? So,
Yep. I will.
A quick question. I saw you invested in something outside of Boston. I'm just curious about that because that's near me. I'm outside of Boston.
Yeah. So no, we invest in lots of markets. So with Massive Capital, we invest in markets where we have local partners. So in Denver, North Carolina, and Georgia, we have local partners. And then I passively have invested in markets where I have people that I know, like, and trust. So for example, I've done 2 investments in Tucson, Arizona. I've got a new build storage in North Carolina. Have that one deal in Columbia, South Carolina. So part of that is, and it's for my personal strategy, I try to balance it out a little bit. So I don't want to only be Texas focused, because what if something happens with Texas? So I want to stay in landlord friendly places, high growth places. So I like Arizona, Texas, Georgia, North and South Carolina. If you get rid of hurricanes, I'd love Florida.
I'll see what I can do. No, but I noticed you, I'm just curious about the one outside of Boston that you listed somewhere.
Oh, the one in Round Rock. Is that
Round
the one I
Rock?
listed on one of my deals in Round Rock, Texas?
No, Boston, Massachusetts, I
Oh,
thought.
no, there was nothing in Boston. Sorry.
Oh, okay.
Yeah. I like the
Never
Lost,
mind.
though.
Yeah,
Yeah, so
noted.
I've done
Lobsters.
nothing I've done nothing north, other than Denver. Well, North Carolina is kind of north, but,
Okay.
and I posted a link to that book on Amazon in the chat. Awesome. Well, hope this was worth you guys showing up tonight. I always try to add value wherever I can. I'm just gonna put my Zoom link in the chat because that's easier for folks on a phone. They can just click it and it will take you to my calendar to book a call versus going to my link tree and having to rummage through. Awesome. All right, Charles, I think I wore them out.
Thanks for participating and thank you for coming out and sharing your knowledge. Let me stop the recording real quick.